Sovereign Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. When we talk about the markets, the last three trading sessions has actually seen the Nifty continue to trade in a narrow range and remain in a consolidating mode. Now, since the rally that we saw on Friday and Saturday when we saw those record high levels, the index has really not exhibited any signs of either moving towards even higher highs towards 22,500. Neither are they slipping from their all-time high levels and are protecting the 22,400 mark as well. Even yesterday, we just saw about 150-point band range as well. The big question is, will the momentum continue on the markets? Or will the increasing RBI action across the board in the NBFC space now seem to bring in some kind of a concern and put that lid on the upside on the markets? That's something that we will continue to discuss all through this edition. But first up, the top headlines we're tracking for you this hour. It's raining block deals on Dalal Street, with auto ancillary giant Samvardhan Motherson's foreign promoter Sumitomo Wiring planning to sell about 29.5 crore shares or 4.5% stake in Motherson. Zomato's parent, Antfin, also is in queue for a partial stake sale. Meanwhile, Indian shares are likely to consolidate in a narrow upward trajectory as weak cues from overseas deter local bulls from taking aggressive positions. Well, good morning to all our viewers present here today, and good morning to you, Shail, as well. It's a truncated week. We all know that Friday is a holiday on account of Shivratri, and today is the weekly expiry for the Nifty Bank. And of course, the newer RBI actions is now taking the spotlight as of now to the entire NBFC space, which has rather been under pressure since yesterday. Shail, on the Nifty, do you see the index exhibiting any signs of fatigue? Especially not just on the NBFC factor and the RBI actions, but also because the broader markets are increasingly coming under pressure. Specifically, the small caps that have not been keeping up with the uptrend that we have been seeing over the last few trading sessions. How do you see the Nifty really going forward?
Good morning, Sakshi, and a very warm welcome to the viewers who are joining us on this fine Wednesday morning in New Delhi. Yes, we see some kind of a fatigue, at least at higher levels, 22,450, 22,400, 22, maybe even 22,375 as far as the Nifty is concerned. The daily chart is right there in front of you. What was good yesterday was that the low of yesterday was fairly strong testing of the 5-day exponential moving average, therefore 22,280 held, and of course the Nifty closed somewhere above 22,350 in negative territory, 50 points lower. So 22,400 goes back to the bears, and Sakshi, that is a cause of concern simply because the Nifty is unable to inch up beyond 22,400, 450. And that's mainly because you see mild profit booking happening in the NBFC space. IT is not performing at all, and we'll share lots of other screens to you. If you see cues coming in from overseas, Nasdaq took a very strong beating yesterday on Wall Street, and today at 8:30 p.m. Indian time, the US Federal Reserve Chairman Jerome Powell will be giving his view on how interest rates will move ahead. And before that, you've seen a massive profit booking happening across the board, whether it's Apple, whether it's Tesla, even Bitcoin. So people are hedging their bets and moving on to the sidelines before the main event, and Nifty is no different. Therefore, you see this narrow trajectory, which is range bound. You have 22,300 on the upside, 22,450, 425 on the upside. So this narrow 75, 80, 110 point range is where the Nifty is meandering in. And it's unlikely that you'll see some strength coming in because of a lot of other pressures that are being faced by the market, in particular the RBI action on two NBFCs, IIFL Finance and Paytm, and last evening on JM Financials. There is some rumor in the market that more is in the pipeline as far as RBI is concerned, and of course a series of block deals. Sakshi, I think that's the biggest overhang. Foreign promoters who have a deep understanding of their Indian subsidiaries are in a pipeline, so to say, to take advantage of these rising stock prices. Today you will have Samvardhana Motherson, Sumitomo Wiring selling about 4.5% stake at about 118, 119 rupees a share, raising 3,500 crores, and Antfin, the parent of Zomato, trying to sell a partial stake for about 2,000 crore rupees. So this pipeline is getting stronger and thicker. Last week it was Whirlpool, it was Conagra. So these are not good signs for bulls in the immediate term. So Nifty, let it remain where it is. I don't think so there's a trade on the Nifty today, Sakshi.
Okay. On the Nifty Bank then, Shell, it did end higher on Tuesday as well. It did outperform the Nifty as well. And it has HDFC Bank and also State Bank of India to thank for that. That ensured that the Nifty losses were kept in check. But also they took the Nifty Bank higher. Now, but despite the 125 point range, the index did face some selling pressure above 47,700 mark and ended off those highs as well. And now you have the overhang of the non-bank lenders with respect to the RBI's measures. We did see Bajaj Twins falling over 4%. Of course, there was a 20% lower circuit on IIFL Finance, and there is more to be coming in perhaps under pressure in trade today.
Sakshi, I think relatively speaking, Nifty Bank is far stronger than the Nifty, and you see the index trading at its highest level since 16th of Jan. You have the daily chart in front of you. Yesterday's close was 47,581. Nifty Bank up with the in conjunction with the Nifty PSU index were the only two major gainers on Dalal Street yesterday. The index ending 125 points higher and closing towards its day high. So that's a big plus that people often look at. So 47,581 is the close yesterday, and 47,725 was the day's high. This is bang in the middle of what was the gap between 16th and 17th of January, and that is what the index is trying to fill in, with PSUs bringing in a lot of support from the banking side, as also SBI and ICICI. Axis Bank was also starting firing. So these are the 3 or 4 banks that are doing phenomenally well, and they are index heavyweights. HDFC Bank is not doing anything. Let's just avoid that. So my understanding is that a dip in Nifty Bank is something that needs to be purchased, and of course today is the weekly expiry, and of course a truncated week ahead. So I would imagine that Nifty Bank is a far stronger candidate on the long side as far as traders are concerned, and a dip towards maybe something like 47,000, 47,300, where you have strong put writing, is an opportunity again to go long. This gap will be filled. Bank Nifty will hit a record high. That's a given. It's only time which is the moving target, Sakshi. Maybe midweek March, we will see a record high on Bank Nifty.
Okay. Shail, anything in the F&O space that you'd like to highlight in terms of stocks?
Sakshi, I think individual stocks we'll not discuss today because the trend is not in favor on the long side. You have sustained weakness coming in Bajaj Finance, which was 4.5% lower in trade. You have the overhang of the RBI, you have the block deals coming in. I would imagine that bears are on the front foot as far as sentiment is concerned on Dalal Street, and bulls are on the back foot. I don't see any major moves coming in as far as options trades are concerned. You look at how the rally will now be cut off on Motherson Sumi. This was one of the few auto ancillaries that we were very bullish on as far as markets were concerned. I would imagine you'll see run-ups happening in Manappuram Finance, Muthoot Finance, because of the problem that is faced by IIFL Finance on its gold loan portfolio. And maybe if you put a gun to my head, Tata Chemicals and Federal Bank on the long side. Tata Chemicals in particular.
Okay, fair enough. We'll keep an eye out on these. Let's look at what the global cues have been indicating. Some highlights already pointed out by Shell. So the Wall Street stocks closed sharply lower, while Bitcoin gold scaled at all-time high levels, and market participants are looking at upcoming economic data and the central bank actions going forward. So the Dow, the S&P 500, the Nasdaq all over 1% lower, with the Nasdaq losing over 1.6% in trade overnight. The Asian markets also trading with some cuts early in the morning trading session, with Nikkei down 0.3%, Kospi down about 0.5% as well. The trends in the GIFT Nifty indicated a flat start for the broader index in India, with a loss of about 18 odd points. Subdued start is what we are looking at. In terms of the flows, foreign and domestic, both investors were net buyers in the cash market yesterday, and the numbers, however, could be skewed due to a slew of block deals that actually took place, particularly in stocks like Aavas Finances. So for FIS bought shares worth 574 crores, DIIs purchased about 1834 odd crore rupees as well. But in terms of stock, that's going to be more important for all our viewers to track today. Of course, we're talking about JM Financials. The RBI has barred the company from giving loans against shares and debentures, including sanction on dispersal of loans against IPOs as well, with immediate effect. This follows up with the IFL finance move that the RBI had done previous trading session. The other one is, of course, in terms of the block deals. Sumitomo Wiring, promoter entity in the automotive company Samvardhan Motherson, it will be is likely to offload about 4.5% stake via the block deal. Around 30 crore shares are likely to be sold through this block deal, and the floor price has been perhaps set at around 121, 122 rupees as per the initial reports that we've got. Zomato would be in focus again amid again reports suggesting that shareholder Antfin Singapore Holdings, which is the arm of Chinese Ant Group, was looking to offload about 2% stake or 17.6 crore shares for 2,800 crores through the block deal today. So that stock also could be in focus. The next one that will be on my radar will be Havells. It's now planning to extend its portfolio to introduce kitchen appliances, to sell kitchen appliances like cooktops, chimneys, and built-in appliances as well, starting May of 2024. So these are some of the stocks that we are looking at. But time to welcome our guest on the show. We have Gaurang Shah, Senior Vice President, Geojit Financial Services, now joining in to give his insights on the markets. Gaurang, very good morning, and thank you so much for taking the time out. A very important day to have you, because we do seek a lot of clarification that all the investors are awaiting with respect to the RBI move that we've been seeing. First, it was Paytm's Payments Bank. It came down to IIFL Finance, and now JM Financial. I think the question that everybody wants to know is, how much bigger could this really get? Could this be a sector-wide, industry-wide move? And in case that is so, then what could be the impact on the markets going forward?
Well, thank you, Sakshi, and morning to all of you all. So, when you are in the business of lending money, you need to be extremely careful when it comes to your internal compliance, credit risk profiling, and eventually going by the rules and regulation and the framework that has been set aside by the regulator. If you're going to deviate even slightly from that, then that is going to create a domino effect over a longer period of time, and it may not just stay limited to that particular entity, but it may also spread like a wildfire. And my sense is that, and this is not the first time, Sakshi, we have seen similar actions earlier taken by the regulator on certain other gold loan companies. I don't want to go into name specific. and discipline has been brought in. As recently as upping the margin for unsecured loans. It was actually absolutely in nick of time that the RBI came in and stepped in, because I was reading a report, Sakshi, that most of the loan seekers were the ones who already had 2 or 3 loans outstanding against their name. So to pay back one loan, you are going to take another loan. Imagine the kind of impact that it would have had it not been controlled. So I'm glad that RBI has stepped in. There must be something that has been amiss for which the regulator had to step in. It may have a short to medium term impact on the companies which are involved. Long term impact, I don't think it is going to be, because they would want to take appropriate steps to straighten up their books in terms of compliance ASAP. Not to forget, for some companies, the gold loan business is a little bit on the higher side, which contributes to the balance sheet. But I think this should be a lesson for the others to learn, to go by the compliance and keep in mind the risk profile and credit rating rules that they have with them.
Right. A very good morning to you, Gaurang, and an equally warm welcome on Market today. It's such a pleasure to host you as always. Let's look at the sentiment on Dalal Street. There is buzz that banking space seems to be now getting its due share of limelight on Dalal Street, and it's the banking index which might now sort of head towards an all-time high, and about time too. What is your view on the shorter term as far as the banking space is concerned, and any medium-term winners that you're looking at?
Thank you, Shail, and warm good morning to you as well. And before I answer that question, आपको, साक्षी को और BTTV के सभी दर्शकों को महाशिवरात्रि की बहुत सारी शुभकामनाएं, और देवों के देव महादेव से प्रार्थना है कि वो अपनी कृपा आप सभी पर बरसाए रखे और आप सभी का स्वास्थ्य दुरुस्त हो. So to answer your question, Shail, we have been very positive on the entire banking, whether it is financials, whether it is banking or NBFCs. And my sense is that if you're going to create a portfolio within this financial universe, then you should equally give weightage to both banking as well as NBFCs. And in banking, you have likes of private and public sector banks. Public sector banks is something that has been exciting us and the street equally with the kind of performance that we've seen. State Bank of India, you must recollect that we were speaking about this bank sub 500. Now it is at 740 or 750. Still remain positive on State Bank of India. Bank of Baroda, Canara Bank are the two names. Canara Bank, in fact, is under review, so I will not speak much about that. But if you have a little bit of elevated risk appetite, then Punjab National Bank, PNB, Shell, my sense is that this is a big turnaround story within the government stroke public sector bank. Third quarter numbers were extremely above the estimates that we had penciled down, and even the estimates that the street had set aside. Other than this, in the private sector, you have likes of course, you mentioned about a non-performer large private sector bank, HDFC. We are not losing our heart. We have enough patience to give to HDFC Bank. And I think it is going to be a matter of time when you will see performance come through. So again, an extended stretched out time horizon, 2,000 rupees is the target on HDFC Bank. Then comes your Axis and your ICICI and the Kotaks and the IndusInd. Amongst the smaller names, Shell, I think Federal Bank and City Union Bank should definitely be on your radar. And the NBFC universe that I spoke about, I am talking about diversified. So you have housing finance companies, microfinance companies, diversified financial companies, likes of M&M Financials, L&T Finance. Bajaj Finance was in a downward mood yesterday. I think it's a great opportunity to accumulate that as well.
Okay, so that's the view coming in on select PSUs as well as frontline banks in the lending space. Just a bit of aside on HDFC Bank, the lender has informed the exchanges that it's going to hold a series of analyst meets on, I think, between 11th and 14th of March with well-known marquee names in the FII investment world. With that background, let's have a conversation with Gaurang on the other parts of the market. Gaurang, strong profit booking happening in IT, the only index which is now below 20-day exponential moving average, and we see sell-offs on Apple, we see sell-offs on Tesla in the global market. What do you think is ailing IT? Are they just doing some kind of a reaction ahead of the Fed commentary today, and things should improve by next week, or there is something serious afoot?
Well, on a lighter note, Shail, I think whenever the Fed chair stands up to speak, Nasdaq and its counterparts in the US go in a very erratic mood. Right? They show very erratic performance also. Yes. And that's what exactly reflects on our markets. But I think moving above that, we all know about, since the beginning of this year, last year, we were very well aware that US is going to go through difficult times. Interest rates is going to be an issue. Inflation is going to be a bigger issue. And there are going to be statements which are going to fly both ways. Hawkish as well as dovish, depending upon what the data throws at them. So yes, it could be an event-driven knee-jerk reaction, and what has happened overnight on Nasdaq may reflect upon the Indian IT stocks being under pressure. But our sense is that starting new financial year, 1st April 2024, you should have a better performance that we've seen in the years gone by, financial years gone by, that is. And slowly, steadily, that contribution is going to reflect on the numbers and thereby on the share price. It's going to be a little bit stretched out patience, if you will, Shail, but we are still maintaining our positive stance on the likes of large cap like TCS, Infosys, HCL, Tech Mahindra, and in the mid cap universe, starting with the new boy on the block, Tata Technologies, KPIT Tech, Tata LXI, Science Limited, LTI Mindtree, Coforge, etc. So, I mean, I don't think you need to lose your heart as far as your long-term approach towards Indian IT universe is concerned.
Okay, don't lose your heart as far as the long-term view on the IT space is concerned, is the view coming in. Well, what we'll do, viewers, is we'll take a very quick break, and when we return, Gaurang will be with us, and we'll also be joined by Nilesh Jain from Centrum Broking. We will continue to discuss some more pre-opening trades and the outlook on the market opening as well. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back to Market Today. Pre-open rates are with us. I so wish this were true. The Nifty is trying to open 100 points higher at 22,468. This will settle down towards maybe a more stable number. We look at two stocks in particular. JM Financial Services, the overnight RBI action has impacted the stock adversely. 20% lower, 76.40. And that's not how should I say, the complete part. Also look at IIFL Finance, another 20% circuit down. Remember, day before yesterday, RBI had taken very strict action related to IIFL Finance gold loan portfolio, which accounts for about 30% of the loan outstanding as far as IIFL Finance is concerned. So RBI action very, very heavy on these two mid-cap NBFCs. Okay, now the Nifty is settled sensibly, 53 points higher, 22,409. Let's look at stocks that are making the difference. Tata Motors, once again, after yesterday's stunning rally, another 1.7% uptick, 1,040. Okay. Axis Bank today is shining, 1.2% higher, 1114, and about time it has to play catch up with ICICI Bank, which is at a record high. It's opening flat today, 1088. Now let's look at the index heavyweights. Reliance, a percent lower, 2970. Nothing to be worried about. The counter is at a record high. It's just sort of relaxing and consolidating at current levels. Infosys, selling pressure, let's just say, 0.4% lower, 1601. And how about HDFC Bank, 0.3% lower, 1437. That's the state of play of index heavyweights. The Nifty now flattens out completely, as I had pointed out, 22,364. A very quick look at what's happening in the F&O space. As far as the top gainers are concerned, it's IEX and Havells, 9% higher on IEX, Havells 3.5% higher. Multi-commodity exchange and Aditya Birla Fashion, about 2.5% and 2% higher. Very quick look at NSE 500 on the gainers side. Oh, Aavas Financiers, 20% higher, 1629. Okay. IEX 10% higher, 164.70. Bharat Dynamics, 4.74% higher, 1879. This is the state of play as far as markets are concerned. And let's now join Nilesh Shah, AVP Technical Research at Centrum Broking, to understand his two top major picks for today's markets. Good morning to you, Nilesh. What looks good on technical charts?
Good morning, Shalinji. Good morning, everyone. So the focus is clearly on specifically banking space. Yesterday, we have seen an outperformance in the bank nifty. So specifically, PSU banking space are looking positive. So our preferred pick is from PSU banking space, State Bank of India. So we are liking this particular counter for another upside move to continue towards 800 on immediate basis, followed by 820. So these are the two targets on the upside, and can be added at current levels, and I would rather wait for some dip towards 775. Then the risk and reward will turn favorable. So stop loss should be placed below 765. Upside is open for immediate basis 800, followed by 820. So another stock that we are liking is ONGC. Yesterday, this particular counter has also hit a fresh record high. Constantly, we are witnessing a high up and habit of formation in this particular counter. Structure looks still looks strong for another up move to continue towards 290, followed by 295. Stop loss can be placed below 276.
Okay. Very good morning to you, Nilesh, and good to have you with us. A whole host of stocks are in action on the back of block deals as well. So Zomato, for example, Motherson, Samvardhan Motherson, for example, Aavas Financiers, we've been looking at a whole host of these data points. 0.5% lower for the Zomato stock right now at 165 in the pre-opening trade. Samvardhan Motherson, which has been one of the talking points for most of our technical analysts on our show this week, 125 right now. 0.3% of a downtick. So once the block deals kick in, that will be some kind of an action that will take place. Aavas Finance is likely up in trade. How would you look at either of these, Nilesh?
So Sakshi, first of all, good morning, everyone. Good morning to you as well. So Motherson Sumi, as you rightly mentioned, this particular counter, technically speaking, looks strong. Although on the back of a block deal, we might see some knee-jerk impact in this particular counter. But from position point of view, this stock has the potential to move towards 130, followed by 135 in the near term. And if at all we see any dip towards 122 to 120, that can be used as a buying opportunity. The immediate support for this particular counter is placed somewhere around 117. So that should be the stop loss. And we still believe that this particular counter may move towards 130 to 135 in the short run. Apart from that, Aavas Finance, this particular counter has been one of the underperformer. We have seen a lower top and lower bottom formation in this particular counter, and I feel it is better to stay away from taking any contraband at current level. We may see any pullback, but that might get sold into. Structure still looks weak for further downtrend to continue towards 1250 to 1200.
Okay. Gaurang, I wanted to ask you again on... The IFL Finance and JM Financial stocks, again, 20% down move. How should investors be really looking at this? Should one completely stay away, watch till this settles down? Or those who've been looking at this as an opportunity, what should you say to them?
Well, Sakshi, if I give a direct buy, sell, and hold, then I'll have to give my resume to you for job finding. Are in a competitive business. So I would not risk that. But let me say this: not only for this particular names which have appeared because of the stringent action that has been taken, any sector, any company which is involved with some serious issues, then I think it is better to let the dust settle down. Though there are uh, clarification and counter clarifications which fly around till the time we get some absolute clarity. But my sense is that you should not be in a hurry when issues like this are an overhang on any counter, whether it is this or any other company. I think you should just let the dust settle down and wait for some clarity to emerge. This is not a recommendation since we don't have a coverage on either of these two companies that you mentioned.
So, Gaurang, let me just put in my 2 bit. You are always welcome. We don't even need your resume. Anytime you want to start, please let us know. We are happy with open arms to welcome you to our side of the market rather than where you are. But let me just tell you, you are happier where you are.
Thank you.
Okay. The other point, Gaurang, I wanted to pick your brain on was this very thick pipeline of foreign promoters partly selling their Indian holdings. Whirlpool, Conagra last week, actually Agrotech Foods, and Sumitomo wiring today on Samvardhana and perhaps Zomato as well. What are the foreigners reading in this bull market which retailers and institutions domestically are either unable to understand or they do not want to understand given the strength of the bull market? How do you see this thick fat pipeline of partial exits by foreign promoters?
So we also heard about British American Tobacco wanting to take an exit out of ITC. So Shail, I think hope that the financial wizards, advisors to these promoters who have a large stake have done their homework and used their wisdom. It's rather surprising to me also because you are invested in a counterpart in an emerging market like India with an entity which is doing well and where the opportunity is going to be much more than what we see in the present level. I have possibly no clue. I hope that common sense and wisdom prevails upon the financial advisors who have advised these large stakeholders to either partly exit or completely exit, and I hope they have better avenues to invest that particular proceeds as and when they sell the stake and get that kind of liquidity. But I still remain extremely optimistic about the growth opportunities that lies ahead of us in our own Bharatvarsh, Devbhoomi Bharat, Shail. I think if they are going to have a backdoor exit, then maybe after some time they might possibly say that no, it's better to come from the front and again bring back that money. But that's a wishful thinking from my side.
Yes.
But I hope they have better avenues to deploy that.
Yes. I have this wonderful background in my mind over the last 30 years. One set of CEOs comes in, looks at shorter term valuations, decides to take an exit, and then after 5 years the CEO is replaced, a new one comes in and says, oh my god, we are not in India and we had this huge holding in a lovely domestic company which is doing phenomenally well, we must buy it back. So it's one of those circles in life that happens. I still remember Fidelity exiting out of its Indian mutual fund business, which was the only one where globally you were allowed to charge a higher fee when it comes to active fund management, and they're still on the sidelines waiting to come back in. Be that as it may, let me just highlight 4 prices which are of extreme relevance today. So ladies and gentlemen, IIFL has another 20% circuit lower after yesterday's fall. JM Financial has settled 17% lower. Remember, this is the latest NBFC to face the wrath of RBI yesterday evening. Zomato, where there's a block deal expected today, down about a percent, 164.40, and Motherson Sumi, another block deal expected, 1.3% lower, 123.80. Let's get Nilesh into the conversation. Nilesh, anything in the pre-open that catches your fancy?
So Shalinji, as I mentioned, overall PSU banking is one space which is on our radar. Apart from that, from private sector banking space as well, we are watching out for counters like Axis Bank. So this particular counter yesterday, although we saw some profit taking, but if at all we see any dip towards 1090 or 1085, that will be again a good buy. Given the structure which is forming a trading in a sort of a rising channel. So any dip towards 1080 will be a definitely buy, keeping stop loss below 1060 for the upside move to continue towards the 1120 to 1140.
Okay.
Fair
Let's
point.
pick a few.
Would you have a view on Zomato?
That's for me, Shail.
Okay, Gaurang, go ahead.
Yeah, so okay. I was not sure whether that question was for me, Shail. So, right from the IPO to the higher levels it reached, and then a downward move, and then back again to all-time highs. We still have a positive view on Zomato, and 175 is the target. I think there's going to be a major turnaround as far as the, household goods delivery platform Blinkit is concerned. You have delivery charge, you have platform fee. Zomato itself has started charging platform fee even to its gold members, though there are no delivery charges. But the cash registers are going to throw in tremendous amount of positivity over the next couple of quarters.
Okay, so that's the view coming in on Zomato. Nilesh, let me get your view on some of the stocks that were in news and may react to the news flow as soon as a minute further from here. Coal India, how would you look at this stock? The Southeastern Coalfields Givra mine gets their environmental clearance to expand production capacity. And, would you look at this positively now? The stock has been in momentum.
Absolutely, Sakshi. So this particular counter has witnessed a good up move in last few months now, and it is trading at close to all-time high levels. So we believe that sooner or later the stock is likely to inch towards 480 to 500 sort of zone. At current level, yes, the long position can be initiated, keeping stop loss below 450 from trading point of view, as well as from position point of view. We expect this particular counter to test 500 figure in the near term. And if at all, if somebody is holding the long position, can stay put, keeping a trailing stop loss below 450.
Okay. The other one I wanted to ask you is Havells. It's been doing well and now it's planning to expand its products to kitchen appliances. How would you look at the company now with that background? Nilesh.
Yes, the structure for Havells, earlier we saw a multi-year breakout for this particular counter. So yes, we have a buy on this particular counter for further upside move to continue towards 1600 to 1650, and stop loss should be placed below 1525.
Okay. Let's look at the opening quotes on the index. The Nifty's opened 51 points lower, 22,304. Let's see how 22,250, 22,200 hold. But for the moment, it's a back down. The Nifty Bank has opened 127 points lower, 47,460. Pain continues on Nifty IT. This is the overseas weakness from the Nasdaq that's coming in. Let's look at the two most important counters for today. 20% again downtick on IIFL Finance, 382.20. At least there is liquidity. About 21 lakh shares have been traded. JM Financial is 15% lower, 80 rupees 50 paisa. Strong volumes of 73 lakh shares. Motherson Sumi, the block deal has happened, ladies and gentlemen. It's the top traded counter. About 2,500 crores worth of transactions done. 3.2% lower at 121. Zomato, again the block deal has happened at 161 rupees. The counter is 2.9% lower, and the turnover so far is 201 crores. Let's see whether that block deal is in the pipeline or not. But Motherson is through. Both IIFL and JM Financials are in pain. Let's shift focus to apart from news to what's happening in FNO stocks. Okay, Muthoot Finance, the pain in IIFL is getting positively impacted on Muthoot Finance. Nilesh will be the first stock person to comment on Muthoot shortly. PFC and REC 2.5% higher. ABRFL, where there is a conversion of warrant into shares, 2% higher, 233. IEX, BHEL, and MDC. It seems to be a PSU day on at least the FNO space. A very quick look at NSE 500 in terms of top gainers. Okay, the stock that I would like to mention is Bharat Dynamics, 1847, 3% higher. Oil India 1.1% higher, 638. These are the ones that make sense initially. Nilesh, coming to you, your view on Muthoot Finance, pain on IIFL and a positive outlook on Muthoot Finance. Your view technically.
Yes, technically speaking, we have witnessed a good reversal in this particular counter from the levels of 1260, 1270 odd levels. And in large 4 to 5 consecutive sessions, we are witnessing a sort of a pullback, and this pullback may extend further towards 1450 to 1500. Yesterday, there was a sort of a spike we saw in this particular counter, and it hit a high of 1527. So that's the next major resistance as of now. But at current level, if somebody is holding the long position, can keep a trading stop loss below 1350 for further up move to continue towards 1425 to 1450.
Okay, just a moment please. Infosys and TCS are now down 1% each. So the weakness that is coming in from Nasdaq is now creeping into domestic IT sector. The index itself, the Nifty IT index, is the top loser, 1% lower, 412, 36, 321. Nilesh, any view on IT, any step that you want to take?
Overall, IT as a whole, specifically large cap ITs, are looking slightly weaker on the chart. And TCS, as you mentioned yesterday, it is down, and from past 4 to 5 consecutive sessions, we are witnessing a downtrend that has continued. We believe that going forward, it is likely to test the levels of 3900 to 3850 on the lower side. So it is better to stay away from large cap ITs for the time being. Even Infosys, for sake, if you look at it, has given a symmetrical triangle formation breakdown. So downside is still open for 1550 for Infosys, and any pullback we might see that is getting sold into. So it is better to stay away from taking any long position in the IT space for the time being.
Okay. Let's get Gaurang into the conversation. Gaurang, I wanted to ask you particularly on the gas stocks, the city gas stocks as well, especially Mahanagar Gas. That's down by 9.5% today after reducing the CNG prices by 2.5 rupees per kilogram. Now, this space was constantly gaining traction, record high levels being seen on GAIL, MGL kind of stocks over the last few trading sessions, and then this step comes in to deter all the investors. How would you really look at now this stock now?
So, short-term adjustments in terms of pricing will happen upward, downward, depending upon where the natural gas prices move, Sakshi. So that should not create any kind of long-term adjustments into your portfolio in terms of selling out and exiting the stock. We remain positive on Mahanagar Gas. We remain positive on Petronet LNG. We're positive on Gujarat Gas. We are positive on IGL, to name a few. And it makes sense is that as consumption picks up, you will see volume growth coming in for these companies. Whether it is piped natural gas, whether it is LNG, whether it is CNG, this uptick is going to happen over a longer period of time. So I'm not really, disturbed or concerned with these short-term price adjustments. Volume growth will take care of these kind of price adjustments.
Okay, volume growth will take place at this point in time. So one has to keep an eye. More and more sectors coming under pressure. We just have PSU banks that are holding up after yesterday's strong move again. Oil and gas, metals, financial services, some of the other pockets that are looking positive as of now. On the Nifty, you have SBI Life as the top mover on the index today, 1.2% higher, followed by Bajaj Auto, Coal India, Reliance Industries, BPCL, Kotak Mahindra Bank. These are the kind of stocks that are doing well. Gaurang, would you have a view on the life insurance stocks? SBI Life as the top mover today. What's really happening in this entire space? There's some kind of momentum building up.
So traditionally, or over a longer period of time rather, Sakshi, life insurance companies have been underperformers, let's face it. And now with the kind of run rate in terms of higher insurance, new insurance premium is concerned, is coming in quite above the estimates that the street had. We're positive on four leading names, four or five leading names, starting with LIC, SBI Life, HDFC Life, and ICICI Prudential Life. And my sense is that if you have 1.5 plus kind of time horizon, Sakshi, and the reason why I'm saying this kind of a time horizon is because these positivities will take time in terms of translating into revenues and then reflecting that on the share price. More and more people are taking higher sum assured, and by that virtue of higher sum getting insured, you and me have to pay higher insurance premium to the insurance companies. So that's the big positive that I'm looking at, and that's not only in the top of the pyramid, but it's like top down approach as far as wisdom prevailing upon a common person on the street.
Okay.
This is the one which is in thick of trade on the long side, and I will request Nilesh's views on this one. I'll just mention the themes that are moving. The entire energy space is up. HPCL, BPCL, IOC. They are showing strength as far as prices are concerned. We see defense on a fairly strong footing as far as prices are concerned. BDL 3% higher, 1848. The power space through its financing arms, PFC and REC are showing 2.5% uptick each. And of course, you have yesterday's favorite MRPL and Chennai Petro in the green. Nilesh, very strong traction on the long side. These are all high beta, low ticket items. What looks good to you?
All the sectors and stock that you have just highlighted, out of that, OMC stocks in fact are looking positive, still looking positive. And within OMC space, counters like BPCL and IOC, these are the two specific counters that we are liking. So IOC is looking positive for 181, 184 sort of target in the near term. Stop loss can be placed below 174. So this particular counter can be bought. Now you spoke about the defense names. So HAL, where we have seen another all-time high today. I think it is on the verge of breaking out its previous all-time high. So structure for HAL is still looking strong. For the further up move to continue towards 3300 to 3350 on immediate basis. So this particular counter can be bought keeping stop loss below 3160. Apart from that, from auto space, the counters that we are liking is Bajaj Auto, where yesterday as well we have seen a good up move, and today we are witnessing a follow-up move. So this particular counter is looking positive for further upside to continue towards 8500 followed by 8600. Stop loss can be placed below 8340.
Okay. Any view that you would have on Muthoot Finance or Mannapuram? Today is Mannapuram's time, 180.75. A quick view on that one, sir.
So Mannapuram, yesterday we saw spike in both Mannapuram and Muthoot, but today if you look at the structure, it looks like we are witnessing further distribution and further selling pressure. And the major support for this particular counter is still placed at 170. So there is still a room of another 3-4% downtick in this particular counter. So I won't recommend any buy at current level. It is better to stay sidelined from this particular counter for the time being. Rather, I would say overall NBFC space, it is better to stay away for the time being till we see any settling down process. But as of now, structure is looking slightly on a weaker side. It may test 178 to 176 on immediate basis.
Okay, let me get Gaurang into the conversation. Gaurang, I wanted your views on Tata Motors. We haven't asked you on after the demerger news really came in as to what should investors be really doing on this one. Just about flattish with a positive momentum being seen today, 1027 on Tata Motors. What would your advice be? How are you looking at this demerger? Create some kind of a value for shareholders and investors?
So we are hopeful that it will, Sakshi, and I think it's a well thought out strategy in terms of separating the two businesses and having a focused approach in terms of new product launches and maintaining that market share. Not to forget, there is going to be competition as we go forward from here on. And in the sector, as far as automobile manufacturing is concerned, the government's uh, excitement is to bring India from number three to number two or number one, and that will also bring in a lot of competition. I think passenger vehicle, electric vehicles, ICE engine, and the premium segment Jaguar Land Rover coming in that one, and commercial vehicle in the other one will open up tremendous amount of opportunity, not only for the company but also for the stakeholders, however big, small or medium they are. And I think it is about 12 to 15 months kind of time for this entire process to get through once they have the approvals in place, and value will definitely be created. And more so, rather than this merger demerger business, the news flow, Sakshi, I think I am very much excited on the news as far as making the balance sheet debt light or debt free.
Okay, so that's view on Tata Motors.
Okay.
What about the two-wheeler space? That's also been exciting. So Bajaj Auto constantly moving higher, and we're again looking at a percent uptick right now. It's the top mover on the Nifty again. And two-wheelers is a space that we always discuss with you. So Bajaj Auto, Hero Motor, we recently saw TVS also climb to fresh highs as well. Anything exciting happening in the two-wheeler space that you'd like to attract, investors' views in?
So first green shoots, if you will, in terms of recovery sign, Sakshi is definitely visible on the two-wheeler space because that's the entry level. And I was listening into the commentary from Mr. Bajaj yesterday as far as the business outlook, not only in the domestic market but also in the export markets, geographies which had troubled economies. All those things are now turning around for good. So export market is looking extremely well poised in terms of growth going forward from here on. And domestic market, I think the demand is going to grow slow and steadily on the higher side. Last year, because of erratic monsoon, the entry level and mid-size segment level for two-wheelers was a little bit down because of the erratic monsoon and the incomes getting affected or impacted. But I don't see that happening. And there are lots of policy changes that the government is doing for the automobile sector. And mind you, Sakshi, along with auto ancillary, OEM, tire, and battery manufacturing companies. All these are a pack of wolves which will start moving together.
Okay. All right. So autos, as long with auto ancillaries, will all start to move together. Nilesh, let me bring in you into the conversation. Which of the parts of the markets, as far as the auto space is concerned, attracts you the most as of now? Would you go with the auto ancillaries or either of the two or the four-wheelers back?
Right. So, Sakshi, we are being stock specific within the space. We have already recommended buy on Bajaj Auto. So, two-wheeler space specifically, this space is looking attractive. Bajaj Auto, we already gave our immediate target of 8900, 8500 followed by 8600. So, structure is still looking strong, and we expect this particular counter to hit a fresh record high. Apart from that, another stock that we are liking is definitely TVS Motor. And this particular counter, we have seen good attraction in last few trading session. It hit a record high today as well, and it may move towards 2400 in the near term. So at current level, can be bought keeping stop loss below 2250. And apart from that, from four-wheeler names like Tata Motors, this particular counter is also we are liking. So structure is looking positive. and we expect further up move to continue towards 1035 to 1040. On immediate basis, stop loss can be placed below 1050.
Okay, let's take a detour into the market. We are seeing the first 15 minutes of trade. The Nifty is flat as flat can be, nothing much happening there. The pain on the IT index is now getting aggravated. It's down about 1%, 312 points lower. Within the broader market, Sakshi, I don't think so. Wednesday started on the front foot for bulls. We tracked 19 indices for you. Nearly all 19 are in the red. The advanced decline is firmly in favor of bears. 1454 shares are in the red compared with just 657 that are in the green. Let's look at the advanced decline ratio in the NSE 500. That gives you how the sentiment is moving. About 127 shares are in the red versus 375 which are in the 375 shares in the red versus 127 which are in the green. Across the board, there seems to be a mild bout of profit booking taking deeper and deeper roots. Metals is in pain. When you look at the Nifty Metals Index, 8236, 0.8% lower. Tata Steel, Nalco, all of them in the red, including Hind Copper. And these are, coming on fairly strong volumes. You see fairly strong moves coming in terms of the most active counter in terms of sells. So if you look at the first 10 odd stocks in the FNO as far as volume is concerned, about 9 of them are in the red. So that's painful, and this seems to be gathering momentum. BHEL 0.5% lower, 264.30. Tata Motors in the green. NHPC 1% higher, 93.50. Gaurang, let's take a view on Tata Motors from you. How do you see this mega demerger that has been planned? Is it going to be shareholder accretive, or has it happened at a time when the counter looks fully valued?
Fully valued depends upon what the time horizon of an investor is. If you have a longish time horizon, we remain extremely upbeat about the stock, and we mentioned about Tata Motors for a pretty long period of time, and even in today's date, we are extremely excited about this particular counter. Your question whether it is going to be value accretive, the demerger process, I am quite sure it will. It's a well thought out business strategy at a time when you have a lot of large international players wanting to enter India and establish their manufacturing base in India. Government's policies are also extremely positive towards the auto sector. Not only just the auto sector, auto ancillary, tire, battery manufacturing companies, these all will complement each other. It's one pack. And with the kind of launches that Tata Motors have lined up, not only in the passenger vehicle, domestic Tata Motor business, but also for the high-end premium JLR, that is Jaguar Land Rover, and also from the commercial vehicle side. Stock has run up in the last 6 months to a year share. Because of this news, it has also surpassed the targets that.
Absolutely.
I think we'll just wait out for the fourth quarter earnings to come.
On the near.
Sorry.
Fair point, and that's a very sensible approach. Let's look at earnings and then take a call. As Sakshi never fails to mention, in 2023, Tata Motors was the top performing stock in the Nifty, up 92%. What we'll do, ladies and gentlemen, we'll take a very quick break. And Nilesh, thank you so much for spending your valuable time with us. We're very grateful. Beyond that break, we'll be discussing how the markets are shaping up. I think it's going to be another day belonging to the PSU basket with banking in focus. Both Bandhan and Kotak are showing signs of good moves.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. The Nifty is flat as flat can be. We are 61 points lower, 22,300 for you. The Nifty Bank on its weekly expiry day is flat as flat can be, 47,544 for you, 38 points lower. Nothing much happening as far as the main indices are concerned, but it's a very serious bout of profit booking in the first 20-25 minutes across the board. If you look at volumes, volume sales are being pushed onto block deals such as Samvardhana Motherson, now 3.5% lower, Zomato 3% lower. These are the two top traded ones. Selling pressure evident on JM Financial, which is the RBI action that's reflecting 82 rupees there, 200 crores worth of shares changing hands on JM Financial, and IIFL having a second consecutive bad day, 20% lower, 382.20. Let's look at the very few bright spots, Sakshi. It's really difficult today to find them. Maybe in the rail space, we have something worthwhile. We have, well, there's nothing much here to talk about. Profit booking happening in HBL Power, 2.7% lower. RailTel 2.6% lower, RITES 2.3% lower, IRCON down 2%, RVNL, IRFC. So basically, the entire mid-cap space is now under selling pressure, if you look at it from that point of view, and nothing much happening there. Just Kotak and Bandhan as far as prices are concerned in the green. Let's look at the banking space and see if there's anything worthwhile within the Nifty Bank. ICICI Bank in the green, Kotak in the green marginally 0.7% higher, Axis in the green 1/3% higher, 1130. Yours, Sakshi.
Your view on the power space, which we've discussed with you in the past pretty widely, and again we are seeing after a long gap PFC, REC ticking higher in trade for 1.5 to almost 2% higher. We've seen NHPC talk about how they're going to be setting up a 1200 megawatt solar power park in UP again. So the entire focus coming back on the renewable energy space and the solar space again. How would you be placing your top bets and your money as far as the renewable energy as a long theme is concerned? What is the best way for investors to deploy their funds for those who are looking at this theme very promisingly over the next 4 to 5 odd years?
So along with green and renewable energy, green hydrogen is also which is likely to perform. And given the deficit of power supply in our country, I think the government is moving in the right direction. So the best way to place yourself is that you look at power generating companies, you look at power transmission and distribution companies, and you look at power equipment companies. So make a portfolio, a mixed portfolio of these three verticals, because again, they are all counter dependent on each other. So you have Tata Power, you have NTPC, you have CESC. Amongst the power generating companies, you have names like Power Grid in terms of power transmission distribution, and this company has also stepped up its efforts towards going into solar energy. Power equipment manufacturing companies, something like KEC International or maybe L&T is something that you should look at. Basically, transformers, etc., which are required to get the power generated from the manufacturing end to the consumer end. This is the basket that you should possibly make out in the power sector.
Okay. Right, so that's as far as the power space is concerned and the best way to build a portfolio around this as of now. Let's look at some of the other spaces that are moving. Yes, it's the Nifty Bank again that's trying to look at some green amidst the entire slew of subdued trade that we are looking at. So Kotak Mahindra Bank, ICICI Bank, Axis Bank, IndusInd Bank, Bandhan Bank, they're all coming back in flavor. Gaurang, your view on the banking space, especially the large private banks, how would you look at them now?
I think it's been a long phase of underperformance, uh, especially with HDFC Bank. When it comes to Axis and ICICI, there are bouts of performance and profit bookings, Sakshi. And given that you have fourth quarter earnings coming through in the next maybe about 15 to 20 odd days or maybe more, the mid of April onwards, if I'm not mistaken, you will see the fourth quarter earnings. And you have a big event in terms of general election. My sense and my humble request to all your viewers and investors is that market from now up until election and the results done and dusted, you will see a lot of volatility in the market. And it has proven every 5 years that we go into a general election. Though the anticipation of the outcome of the state election is something that most of the people on the street know, and if it go as per the expectation of the large part of the voters or market expectation, then I think the market is going to give you a very decent swing upwards. But from now up until election, you're going to see a lot of choppiness, volatility. In that, you will have opportunities to build a decent portfolio. So keep a mix of large cap private sector bank, mid cap private sector banks, and mid and small. I beg your pardon, large and mid public sector banks, something like State Bank of India, Bank of Baroda, PNB, etc.
Okay. Sakshi, I think banks are making a comeback, and making a comeback like how? You see the banking index, Nifty Bank, now 200 points higher. It's at 47,813. Our morning commentary did hint to the fact that the Nifty Bank is a stronger candidate for traders compared with the Nifty, and the gap that was referred to between 16th and 17th of January seems to be filled up to the extent of about 80-85%. Let's see how that happens from now on, but for the moment it's banks all the way. And the good news is that even HDFC Bank is in the green, which is a major positive, because almost 33 to 35% weightage that we see in the banks is in the Nifty Bank is held by HDFC, which is a fourth of a percent higher, 1446. Apart from banks, I would imagine a lot of selling pressure is now seems to be easing, and it's the banks that are taking away. I think we are going to see a digit change in ICICI Bank today. Yes, it's now at a record high. Not only that, it's shifted momentum to the 1100 mark, and that's the good news as far as prices are concerned. Yes, I would imagine this is a fresh 52-week high for ICICI Bank. It's Axis. It's the blowback from Sakshi, the private banking space, which has been pilloried a lot. So PSUs rose yesterday within the banking space, and it's the public sector banks, private sector banks that are taking it away. In a span of less than 3 minutes, 100 points have been added on to the Nifty Bank. Now 300 points higher, 47,874. Sakshi.
Absolutely, banks are taking it away, and apart from this, I can also spot some buying happening in select FMCG counters, Nestle, HUL, Britannia. Also, some pharma counters. Sun Pharma is coming back in action. Torrent Pharma, we've been looking at Glenmark Pharma. These are the counters that are coming back. So some defensives coming back into flavor as well. Gaurang, how would you be looking at the FMCG space, which has been a rather big laggard up until thus far, with absolutely no enthusiasm, with the hopes of upcoming interest rate cuts fueling some kind of fire in this space?
It's going to be a time. It's going to be a little bit longish time in terms of performance. We all know third quarter was a little bit disappointing in terms of volume and profitability and profit margins. And that's primarily because of the lower demand from semi-urban rural India and tier 2, tier 3 cities. But we remain positive on the entire consumption theme, that is FMCG, starting with ITC, HUL, Tata Consumer, Godrej Consumer, Dabur, Marico, Imami, Britannia, Nestle, and we believe that the input cost, which was also a pressure on the profit margins, is now a thing of the past. But for the performance to come through, will take a little bit a while, a little bit longer. Possibly next financial year, second quarter onwards, you should see a very stable improvement.
Okay. And the pharma space, Gaurang, where exactly are you keeping your focus in the pharma space particularly? Is it the large cap pharma names that you're liking? We've seen a slew of, downticks on the hospital space amidst the Supreme Court's directive, which is still to play out. And we've been seeing periodically all these hospital stocks take a beating. But the entire pharma space, how are you looking at this amid this kind of a development?
So bringing in discipline is very necessary, Sakshi. Whether it
Mm-hmm.
is private hospital or government hospital, you should have health facilities available to each and every person and each and every strata of life, whether it is BPL, at BPL or above that. Having erratic price list for health services is something that is undesirable. Uh, Humanity is something that you have to look at rather than looking at your profit and loss balance sheet. And bringing in stability and discipline is absolutely need of the hour. So yes, it was a whip that was needed to be whacked, but we remain positive on Apollo Hospital, Nara and Rudalaya, Fortis Healthcare. In the pharma universe, four larger names, if you will, Sun Pharma, Cipla, Dr. Reddy's and Divi's Laboratories. And equally, we like names like Zydus Life, Zydus Wellness, Orbindo Pharma, to name a few.
Okay. Let's look at again the broader markets. It's the Nifty Bank that's stealing the entire limelight today. 277 points higher, 47,865. A bit of a breather coming in from an intraday high of 47,900. The index is testing its first support, which was the earlier resistance at 47,810. And let's see what the next 10-15 minutes hold for the index. But given the sharp burst that we've seen, Sakshi, today's low was 47,460 on the index. So 47,500 has been held. And from then on, it's been a one-sided move over the last half an hour or so. Beyond the Nifty and the Nifty Bank, unfortunately, there's nothing much on the green side today. Profit booking across the board. So Hindustan Petroleum 509, it's about a percent and a half lower. At the moment, all the energies of traders is concentrated towards booking profit. You have Mahanagar Gas, which has cut down prices of CNG in Mumbai by about 2.5 rupees a kilo, bearing the brunt of selling pressure, down 11% at 1391. Similarly, Indraprasth Gas is 7% lower, 425.50. L&T Finance, Mannapuram Finance, AB Capital, the entire Fin Nifty, the NBFC space taking it on the chin. And that's mainly because of very, very strict RBI action coming on two NBFCs back on back, IIFL Finance and JM Financials. And it's the entire NBFC pack apart from Muthoot Finance, PFC and REC, which is sort of in the grip of how should I say, sellers. Bajaj Finance, after yesterday's drubbing of 4%, is down 1.2%, 62.76 in futures. Sakshi, profit booking across the board. Let's see the energy pack. You have Gas Authority now 2% lower at about 191. Hindustan Petroleum 3% lower. BPCL 1.8% lower. IOC 1.1% lower. These are high beta counters and traders trying to take money away from the table. 951, Sakshi, what have you seen?
We'll talk about all that, but thanks a lot, Gaurang, for being with us onto this special edition and sharing with us all your insights across various sectors and overall markets as well. It's truly always a pleasure to listen to you and to your wise words, which really help all our viewers really navigate through these troubled times as well as regulatory hurdles that we constantly keep seeing. Many thanks for being with us onto this very special edition. Well, it's banks all the way then. Shell, like you pointed out, it's now Kotak Mahindra Bank that's on the top of the Nifty moves. So 1.6% higher, followed by Axis, ICICI Bank, IndusInd Bank, HDFC Bank as well. Amid the top seven movers on the Nifty, you have at least four big bank names that I can spot, at least five odd names now coming into shape. Apart from this, you have the life insurance names that are picking up some more pace. So SBI Life, for example, is now up by about 0.6% odd in trade. You also have HDFC Life that has ticked higher now. About 0.7% of move can also be seen on this one. There's really, very few counters that are holding on to the gains as of now. Even sectorally, when we look at it, Shell, barring the private banks, the Nifty Bank overall, and the financial services that are somehow still holding on despite this regulatory hurdle that they have faced from RBI. Rest of the sectors have all slipped lower in trade. And the one that is taking a beating is the small cap 100 index. Let's look at the small cap 100 index right now. This one has been the kind of a weaker link for the market over the last few trading sessions. If we look at the kind of move that we've seen in just about the last 5 odd days, you'll be able to see the index has been on a downward slide on an everyday pattern as well. So 1.8% of a downtick coming in on this one. Oil and gas is now seeing some serious bouts of profits being taken off the table, 1.5% lower. Metals are losing their sheen, 1.3% lower. Realty, IT space, consumer durables, FMCG, auto, healthcare, you name it. All of them are now down and out. I think on the Nifty as well, it's just about 10 odd stocks that are in the green, and rest of them have all slipped. ONGC, NTPC, BPCL, Coal India, the energy basket is dragging in trade. On the Nifty, Power Grid is down in trade as well. Bajaj Twins are down in trade, and you also have stocks from the IT pack like Wipro, Tech Mahindra that are sliding lower as well. What's still doing well on the FNO space? I would say Info Edge is one stock that we'll watch out for. 1.8% higher. Of course, remember that there was this news flow that dragged the stock, that Google Play Store has removed some of the apps from this company as well. But it then restored, and therefore we've been seeing some momentum build up again on this one. Apart from this, Tata Communications is making a comeback, 1% higher in trade. From the pharma space, apart from the names I earlier took like Torrent and Glenmark, Alchem Laboratories is picking up some pace as well. In the FNO space, and Pidilite is the one that's about 1% higher in trade. But largely, Shell, it's only limited to just the banking names today.
Yes, Sakshi. And Kotak and HDFC Bank are offering even retail investors some kind of an opportunity. Remember, in this kind of a roaring bull market, the sectoral leader of India's banking space, HDFC Bank on the private side, is still below 200 DMA. Kotak Bank is still below 200 DMA. So the burst that you are seeing on the Nifty Bank has some legs. Let's see whether 48,000 is taken out or not. Today's high has been in the vicinity of 47,978, and the index is now testing the support of 47,813. It's done that 3 times over the last 15 minutes, and the rally perhaps is getting sharper. So HDFC Bank, ICICI Bank and Axis Bank, if you can look at ITM calls for those 3 counters, they would provide a lot of, how should I say, action, perhaps on the long side. At the moment, we don't have a technical input coming in, but maybe you can take a fundamental view on HDFC Bank's. Just a moment, let me point out option trade as far as prices are concerned. HDFC Bank at the moment is just 0.5% higher. So 1450 call at 32 rupees is something that can be looked at. Remember, the bank has also informed the exchanges that on March 11th to 14th it will be meeting a series of foreign institutional players to discuss its financing internals. So this is something that you can look at over the last 1 month or so. The 1450 call on HDFC Bank has seen a high of 53 rupees. At the moment it's somewhere like 32, 33, and it's moved fairly sharply from 25 rupees, which was the early morning low. Sakshi.
Absolutely. Let's start winding up the session as well. So the Nifty is now down 0.25%. 22,300 is now being tested on the Nifty. The Nifty Bank, although, is still up about 0.45% at this point in time, 0.5%, 232 points higher in trade. So that's the one where all the action is currently limited to. On the market sectorally, apart from the banking space, the private banks and the financial services, all the other sectors have moved into the red zone. Just about 8 stocks remaining into the green as far as the Nifty is concerned, within which it's at least 5 stocks which are from the large cap private banking space. Sun Pharma, SBI Life, HDFC Life, Nestle, HUL are just some of the other counters that are holding up into the green as of now. F&O space led by Pidilite now 1.3% higher. Kotak Mahindra Bank, you also have Info Edge, ICICI Bank, Torrent Pharma, and Tata Communications as the top movers as far as the F&O action is concerned. Now, when we talk about the kind of moves that we've been looking at on the mid-cap space, there is some more aggravated sell-off that one can spot on the mid-cap 100 index. It's now 683 points lower in trade, about 1.4% lower. So that's where some kind of weakness is trickling in. And let's look at the stocks like MGL, where the selling pressure has further aggravated. I think it's now down by about 13%. It was down 9% when I last checked. So that's where the pressure is building up at this point in time. So stocks like IGL have also slipped into trade now. The gas stocks are actually falling in trade as of now. On the other side, what's still holding up as far as the banking names we've already discussed with you, but IIFL Finance still 20% lower. JM Financial, weakness continues on this one. These are the weaker spots as of now on the market. Small caps also coming under pressure now, about 1.9% lower in trade. So it's the broader markets that are leading this weakness overall into the markets. What we'll do is we'll wind down this special edition. Many thanks, Shail, for being with us. And we'll continue to bring you all the action on the other side about, which are the IPO stocks that you need to focus on. Also conversations around gold and Bitcoin as well, the other asset classes that are gaining strength. So what kind of portfolios should you be building at this point in time? All of those conversations will follow through the course of the session, and we will meet you again at the closing hour as well. With that, many thanks for tuning in on Market Today.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Tata Motors and how you view the big news that's come in, and more importantly, how much of it is already priced in is something